In 2022, Amazon lost $50 billion in market value in a single day. 50 billion. Gone, just like that. The biggest one-day loss in American corporate history. But the real story is far more interesting. Most people think Amazon is just an online store, a digital Walmart with better shipping. That's not even close to the truth. Amazon is something much more dangerous to its competitors, something most business owners completely misunderstand. Amazon is an infrastructure company disguised as a retailer. That's the secret Jeff Bezos built his empire on. And it's the reason they could lose $50 billion and still come out ahead. Let's rewind to 1994. Bezos was working on Wall Street when he noticed something. Internet usage was growing at 2,300% per year. He made a list of 20 products that could sell online. Books won. Why? They were universal, low cost, easy to ship, perfect for testing a new business model. But Bezos wasn't thinking about selling books forever. He was thinking about something much bigger. He called it the flywheel effect. Every part of the business would feed into every other part. Lower prices brought more customers brought more sellers brought more selection brought lower prices. A perfect cycle that would eventually become unstoppable. The problem? This flywheel takes years to spin up. Actually, decades. Amazon lost money for the first 9 years of its existence. 9 years. Wall Street analysts called it a disaster. Shareholders demanded profits. But Bezos kept investing in infrastructure, warehouses, fulfillment centers, logistics, data centers, things that looked like expenses but were actually assets. Here's where it gets interesting. Amazon built a shipping network that rivals UPS and FedEx. They built a cloud computing system that powers half the internet. They built an advertising platform that competes with Google and Facebook. None of these things were part of the original bookstore vision, but they all emerged from the same infrastructure. This is the strategy most businesses miss. They think about products. Amazon thinks about systems. They think about short-term profits. Amazon thinks about long-term dominance. They think about competing. Amazon thinks about making competition irrelevant. Let's look at Amazon Web Services. AWS started as internal infrastructure, just a way to manage their own massive data needs. Then Bezos realized something. Every company in the world has the same problem. They need computing power. They need storage. They need scalability. Amazon had already built the solution for themselves, so they turned it into a product. Today, AWS generates over $80 billion in annual revenue. It's more profitable than Amazon's entire retail business combined, and it all came from building infrastructure that nobody asked for, that nobody even knew they needed. Now let's talk about that $50 billion loss. It happened because Amazon missed earnings expectations. They overinvested in fulfillment centers. They hired too many warehouse workers. They expanded too fast. Wall Street panicked. The stock crashed. But here's the counterintuitive part. Amazon didn't actually lose $50 billion in cash. That was market value. Paper losses. What they actually did was invest $70 billion in new infrastructure. Warehouses in rural America. Delivery stations in every major city. Data centers across the globe. They spent money on things that will generate returns for decades. This is the difference between successful businesses and everyone else. Most companies cut spending when times get tough. They reduce investment. They preserve cash. Amazon does the opposite. They double down on infrastructure when competitors pull back. They build while others hide. They think in decades while others think in quarters. Consider the numbers. Amazon has invested over $1 trillion in logistics since 2010. They own more warehouse space than any other company in the world. They have over 1 million employees. They ship billions of packages per year. These aren't expenses. These are assets that create barriers to entry that competitors simply cannot overcome. Think about your own business for a moment. Where are you spending money that could be infrastructure? What systems could you build that would create compounding advantages over time? What could you invest in today that your competitors would find impossible to replicate tomorrow? The average business owner thinks about sales. The strategic business owner thinks about systems. The average entrepreneur chases customers. The visionary entrepreneur builds moats. Amazon's $50 billion day wasn't a failure. It was a signal that they were building something so massive that Wall Street couldn't even see the full picture. Here's your actionable takeaway. Identify one system in your business that you can strengthen, one piece of infrastructure that would make your business harder to compete with. It could be your customer experience, your fulfillment process, your data collection, your brand reputation, something that gets better with every transaction instead of staying the same. Because Amazon knew something that most business owners never learn. The companies that win aren't the ones with the best products. They're the ones with the best infrastructure. They're the ones who build systems that keep delivering value long after the sale is complete. That $50 billion loss wasn't a mistake. It was a down payment on the future. And that's the real lesson. Build infrastructure today that your competitors won't even understand until it's too late. Because by the time they figure it out, you'll already be 10 years ahead. Your business doesn't need to become Amazon, but your business does need to think like Amazon. Build the systems, invest in the infrastructure, and watch the flywheel start to spin.